Hey everybody, Boris Lester, BK Force. Welcome to the weekly technicals for Euro dollar, dollar yen, and pound dollar, the majors for February 12th to February 16th of 2018. And clearly the theme of this week is the return of risk on, risk off, terms we haven't heard in years because really we haven't had much of it since the global financial crisis because rates have been zero. Now rates are finally starting to trend up. And as rates increase, volatility increases, and as volatility increases, equity prices start to go up and down, and all of a sudden, euro yen, yen crosses, all those things that we haven't seen in a very, very long time react to equity prices, begin to move very much in tandem. Not only that, but dollar CAD, Aussie dollar, Kiwi dollar also begin to trade as risk currencies on and off as the day progresses and the week progresses. So the most interesting takeaway from this week, aside from just the fact that we had massive volatility, is that I think this volatility is here to stay. This is not going to be a one-week wonder. We are now in a different regime environment. We're going to have to watch the equity markets much more carefully. They will come down, and when they do come down, then we return back to sort of trading fundamental technical structures. But until they do, the primary driving trade of anything that we do is really going to be driven off of something that is very difficult to handicap, which is the price movements of equities. And we just need to be very much aware of it, that whatever foundation you have for a trade could be appended very quickly if the risk on or risk off structures overtake the trade for the time being. That's something we haven't been in a very, very long time. So I urge you to pay attention to that because we're clearly in a massive regime change. Let's take a look at the levels for next week and see where things stand as far as the majors go. So the euro has moved down a little bit, but it's definitely got crushed in terms of retreat because of risk aversion flows. That is, the money when risk off flows come into the market, money goes into the dollar and euro tends to come down, primarily because it gets sold very hard on the crosses against euro Swiss and euro yen. And that was really the case. The euro itself came down only about 100, 200 points, but it was the euro yen, euro Swiss crosses that really drove it down to that level. Still, the resistance and support levels are not very different. 24.50 to the upside, 2100. Yen could not make it up to 110, but, and this is very important, we're going to look at the charts here very carefully, very much held the 108.50 support against all of this vicious sell-off volatility. So I think that's really important to remember, and we should be watching that very carefully because if we can bust out above 110, that may provide a little bit of fuel to the fire for dollar yen trade. And the biggest walkaway, the biggest weakness of the week was clearly cable, which faced not only poor economic data, but now prospect of much more difficult Brexit negotiations. We gave up 40, gave up 39, gave up 38, and now support hangs at 37. Those heady days of 143, which we saw just a couple of weeks ago, long gone, no longer a factor. And in fact, this week it's really only going to be cable and the U.S. data that will matter. For the UK side, we're going to look at CPI on Tuesday. That's going to be important, and it's bearish cable. Then we have German CPI, which is really not going to be that important as far as a data set goes. But then on Wednesday comes in the most important day of the week as far as data goes, which is the US CPI data and retail sales. And of course, everything on the pro-dollar case, on the pro-growth case, on sort of risk-on case, depends on US economy growing strongly. And that depends in turn on the US consumer really coming back in full force. So the bullish case assumes tax cuts, growth in the economy, increase in wages, all that should translate into a pickup in retail sales, which in turn should drive GDP growth and pretty much ameliorate a lot of this volatility that we're seeing in the marketplace. It's a big assumption, and we are actually not that confident that there's going to be a bullish case. Kathy's sort of midpoint confident. The best case scenario is that the numbers should be more or less the same at around 50 basis points rise, which will be okay, but not this uber bullish case we're really need to see for calming of the markets. So this will be a very interesting data, especially, and this is the key thing, if it comes in weak, that could be a very important fundamental catalyst for further selling, which could take us right back to fresh lows. So Wednesday is going to be the key pivot for us in the market as far as data goes. Thursday brings us second tier data with PPI, which of course is going to be less important than CPI, so we're going to ignore that pretty much. And then on Friday, more UK data with retail sales coming in. And here also, we are bearish. And this really paints a picture. If you have a combination of negative risk flows and weak UK data, of just massive, massive downward pressure on cable. And even though it's very seriously sold off, there may be a lot more to that trade than we think. Let's take a look at the charts and see how everything is playing out. So sorry, let me pull up this chart on a weekly basis, because I'd like to go and start deeper, because I think the weekly gives us a pretty good clue that euro definitely turned, right? So at this point, if you're sort of looking at the euro trade, yes, clearly still very much a long-term uptrend, but in the near term, very much a sell the rally trade now. We are basically effectively assuming that 25.50 is now the top. We have essentially came to the end of this particular up leg, need to have some consolidation, and the probability that this is going to be a retrace week into which it's going to probably come back and test further lows is relatively high. There's just too much volatility in the marketplace to think that we're just going to have a complete reversal of the move and take out the 25s and continue the uptrend. The much more likely scenario is that whatever meager retrace we have here will be a perfect shortable opportunity as long as you keep your stops above the current highs. There should be fresh lows coming in, because the support doesn't come in here until around the 2100, maybe even 2050. So there's still scope here for a couple hundred points to the downside before the full correction in a healthy uptrend, mind you, is done. And there's still a possibility this could be an intermediate term peak, into which case we could come down all the way to 1800. So whatever be the case, I still think the highest probability trade here is sell into the rallies, on the assumption that we at least get a match of the lows, but perhaps test further lows into the week. Dollar yen, on the other hand, is a very interesting chart here, because as you look at the weeklies, no doubt it's bearish. No doubt this is a very ugly, almost engulfing, but certainly a reversal candle. But what is positive from the bullish side is that this 108 just held like a rock on a weekly basis, and a relatively low risk trade. Certainly, I think a trade worth doing on the open Monday to you, Sunday to us, is taking a small but calculated bet that risk on at least has a small rally into Asia and perhaps Europe. We closed out the day in the U.S. here on a relatively positive note. The S&P, after being down quite a lot, actually ended up on a positive day. We went out into the close on a positive note that usually translates into some continuity in Asia. And that means there's a reasonable chance here we could see 109, 109.50 into Asia early trade. So against this stop here, like let's say the lows over here would be, well, it's the 108 lows on this weekly candle, which I guess is as good as any. I mean, I would say stop anywhere around 107.70 would be fine, because that is such a hardcore support level that if we come down all the way into that level, the flows are so negative, the sentiment is so bad, there's a very high probability that we can crush all the way down to 106s. But for now, the fact that we held, even though the news is terrible and there is really little reason that you want to get sort of long dollar yen, there's perhaps the best reason of all. It's the fact that it didn't fall. And that suggests that there may be a chance here for a bounce. So I kind of really like this trade on the long side. And then, of course, cable is just miserably weak. 38.24 held at 38s barely in the Friday trade, but definitely looks to be a sell the rally trade at this point. Certainly, you have to have a massive stop here. You have to be willing to absorb 400 points movement against you and maybe scale into a position. But that's cable generally. Cable is just simply that kind of an insane trade. But I definitely feel that we're going to see, if nothing else, this type of a structure, retrace day and then further retest of at least these 38 lows. So shorting into 39s, shorting into 40s on the assumption that we retest 38s, probably a very decent idea on cable. I'm most negative of that as we start the week. That to me is the weakest of all the majors. Wish you guys the best luck, the best trading. Boris Schlossberg, over and out.